Morning, Mark Soderberg with ADM Investor Services with your morning egg market outlook for Wednesday, December 11th. Well, mixed trade here in the egg space overnight. Steady to higher here in feed grains, corn about a penny better. Wheat prices 1 to 2 better, a little lower here in the soy complex. Beans off 4 to 5. Meal prices have flipped now and steady to about $1 lower, while oil is 30 points weaker. Speculative traders were big buyers in corn yesterday following the bullish USDA WASDE data. We had them buying almost 24,000 contracts of corn, extending their long position now to nearly 135,000 contracts. Open interest also shot up over 26,000 contracts yesterday, suggesting fresh money coming into the market on the long side. Speculative traders were also buyers in beans, meal, and wheat, while mostly flat in the bean oil. Open interest in soybeans was off over 10,000 contracts, suggesting funds were busy exiting short positions here. We do have our weekly ethanol production data later today, also export sales tomorrow. Otherwise, fresh news is a little scarce. Following yesterday's USDA updates, we do have loftier usage estimates to shoot for in corn and in wheat as they raise exports for both, while also raising the amount of corn used in the production of ethanol. Yesterday's 200 million bushel drop in U.S. corn ending stocks was the largest in a December report in at least 20 years, possibly ever. Also tomorrow, we do get out updated production estimates from CONAB on the Brazilian crops. Yesterday, USDA made no changes to the their production estimates for Brazil, while in Argentina, they did raise production on soybeans 1 million metric tons to 52 million metric tons. Also yesterday, the USDA did reduce the Chinese corn import forecast by 2 million metric tons to 14 million metric tons, despite the fact that China recently lowered their production forecast just over 3 million metric tons. Bean basis levels in Brazil continue to slip as the market has placed growing confidence in this year's crop, possibly reaching record yields. While the USDA made no changes to the bean balance sheet yesterday, I suspect down the road we will see lower exports unless we do see a sudden change in South American weather. A lot of uncertainty still in the vegetable oil market. However, with the biofuel mandates and tax credits hanging in the balance with the Trump administration set to return to the Oval Office in just over a month, we did see bean oil exports nearly double yesterday to 1.1 billion pounds, as U.S. bean oil prices do remain cheapest in the world in the vegetable oil market. This was offset partially by higher production, while there was no increase in crush and lower domestic usage. Usage for biofuel, however, was left unchanged at 14 billion pounds. March corn did challenge the 450 level yesterday and back at it here again this morning. I think we appear poised to take that level out. I have a 470 upside target by the end of the year. Spot beans has now fallen back into that $9.75, $10 range after recently rejecting trade over that $10 level. I still feel the path of least resistance is to the downside with a $9.35 objective for spot beans by early next year, as we try to discourage U.S. bean acres next spring. Inside trade for meal overnight, I do suspect will challenge at 280 low from August of 2020. Inside trade for January oil overnight, as we find support near the 100-day moving average at 42.50. I do look for oil to outperform meal. And wheat has reached fresh 3-week highs here overnight, as tighter global inventories do limit the downside, while we're still searching for a catalyst to ignite a more powerful short covering rally. Thank you for listening, everyone. I hope you have a wonderful day.